The finance industry loves to give complicated names to really simple concepts, and one of those is market capitalization or market cap. Now, if you're looking for a simple beginner level explanation of what market cap is in stocks, you're in the right place. A lot of people get caught up in stock prices without considering the market cap. And so by learning what I'm about to share, you'll be able to better assess companies you're investing in, and you'll make smarter decisions. So in today's video, I'll give you a sample explanation of market cap, and we'll walk through a few examples, and I'll explain how you would use market cap to make investment decisions. So market cap, what is it? When you have a company go public, it's like cutting it up like a pizza. You know, I might go to the pizza shop and I can order a whole large pizza and I can buy the whole thing, or I could buy it by the slice and have a share of the pizza. And when a company decides to go public, like Apple or IBM or Nvidia, any of these large companies, they cut it up into shares. And so most people don't buy the whole thing. They buy a share of stock. They don't buy the whole thing. Well, if you took a company and you cut it up in lots of pieces, sometimes millions and millions of shares, you'll have a price per share. So just like when you go to the pizza shop and you can buy it by the slice, you can buy a share of a company and you buy it by the share, you buy it by the slice. Well, if you took all of those slices and added up what it would cost to buy the whole pizza, there you have it, you have the market cap. So if I had a company that was $10 a share and there were 100 shares, you'd go 10 times 100 would be 1,000. But in the world of stocks, these are enormous companies. And so we divide market cap up into several categories. We could have a mega cap. This would be a company like Apple that is, over $200 billion. You could have a large cap like Coca-Cola, somewhere between maybe 10 billion and 200 billion. You could have a mid cap that is maybe 2 billion to 10, and then we'd have small caps, which is about 300 million to 2 billion. And the reason this is important isn't necessarily that the size of the company would guarantee a great investment or not, but generally the larger this company, the large cap stocks like Apple, they're very well established. One of the people I study a lot is Warren Buffett. And Warren Buffett talks about a moat. And mega cap and large cap stocks are more likely to have a moat, not guaranteed, but they're more likely to have a moat than some of the other companies. For example, he often talks about Coca-Cola, and they sell just under 2 billion beverages a day. They've survived world wars, they've survived pandemics, assassinations, oil crises of the 70s, you name it, they've survived it. They're a very strong company, they have a great moat. And so when you want something that is very, very safe, or safer, I should say, look for large cap and mega cap. These are tough companies to bring down. When you make billions and billions of dollars and you have that much power, you have a lot of staying power generally. The thing you give up sometimes with a large cap or mega cap is those companies can still grow, but they certainly don't have the growth potential that a small cap company does. For example, in the Berkshire Hathaway meeting recently, Warren Buffett said, hey, Berkshire Hathaway, we're getting pretty big. We're equivalent to about 5% of the S&P 500. We're pretty big. Don't know that we're going to be doubling in price anytime soon. So if you're looking for growth, it's a little bit tougher to find that with a large cap company. So remember, what is market cap? It's simply the amount of money it would take to buy every single share of the company. We have this thing called a float, which is how many shares are out there to buy. And if you bought every single one of them, that's what the market cap would be. You take the price of the stock and the number of shares, you combine those together, and you have a product that will give you the market capitalization. Now, when we talk about small cap stocks, these have more risk. Why? Well, they don't often have the same type of stability and moat and staying power. They're newer. So you have more upside generally with a small cap company with a smaller market capitalization, but you don't have that established company that has billions and billions and billions. And so we kind of have every investor is looking for different things. If you're looking for big time growth and you want to take a little more risk, hey, check out some small caps, some smaller capitalization, market capitalization. If you say, hey, I'd rather be established and, maybe I find something with a great dividend and I want to write some options on it and have a company that's more stable, that's where I tend to lean. Then you look at the big blue chip, awesome, strong companies that are large cap or mega cap. So market cap is just one metric we use to compare two companies against each other. And there's many other metrics you should definitely know when getting into the stock market, things like price earnings ratio, which I cover in detail in a video here. If you found this video helpful, don't forget to like the video, subscribe to the channel, and hit the bell notification so you don't miss the next one.